Hey guys, welcome to this video. Will Sebastian here, the trading mentor, co-founder, co-mentor. If you want to trade with us live every day, we just killed another three-hour session off with our members, live on charts with our own plans. Go underneath. So, EURAUD, I just picked an FX pair that's moved a little bit today. You know, it's not gone awfully far, but it has moved somewhat. Swap to the hourly, we've gone from the start of the day, okay, midnight if you like, over here. All the way down to where we are. All right, and the daily candle is showing you relatively strong movement with some price rejection along here. Now, what's causing the price rejection there is this, okay? And this is why price action is so important, because you can clearly see what's going on there. Now, if you zoom out slightly, what you can see is a long-term downtrend. Okay, you can see that by taking the highs of the previous moves, okay, and you can draw a parallel line like that. You can use a parallel channel drawing literally if you do want to as well. Now, what it would take for price to get down here is a removal of the areas in the way, okay? Now, that's what this video is about essentially, because the lesson you're getting here is that these levels have to be broken down first, which is why they're ideal long zones. Now, what kills traders off is that they don't know where to put their exits accordingly. Okay, obviously that's something in depth I teach all the time, but more or less you've got to do it, coordinate to the time frame you're trading, more or less. So if you're trying to swing this, at least for the short term or even intraday trade, your take profit is going to be much higher up. Okay, and you could lock in gains with ITM stops along the way. So your stock oscillator, RSI, whatever you want to use, has dipped slightly. You're now attacking those levels I just mentioned, which are causing your support. So at this point, I wouldn't be shocked, and I've got long orders underneath this as well, wouldn't be shocked if you get slightly lower, because that's where your weekly support level exists. If you flick to your weekly time frame, you can see that right there, okay, with this candle wick. So I don't think you're essentially sort of done with this just yet on this move. I think you may get there ultimately. Now, looking at this sort of mid-term downtrend, if you like, you know, you would then have to reflect on the lower price action levels. And this is something we just did for a long time in our private trading room, discussing how you can take value measurements, if you like, from fib levels. You can see that this level is lower down and therefore has a stronger value than the one higher up because it's lower down, essentially. Other people use fibs in different ways, but generally that's how I like to do things. You can see if you go even further down, your next level of support exists. And like I said, the reason for time frames is because all these levels within that longer trend have to be broken down accordingly. And what you get is mini uptrends within the long-term downtrend. That's why people get confused with trends, because they don't understand how trends are time frame specific. The downtrend you can see here is part of this uptrend from here, all right? So you're getting a big market retracement, and in the long term, you may see higher up, okay? So I would expect each of these levels to offer contention, but nonetheless, they will be my preferred long entry zones. If you are a very long-term swing trader, you would have to reflect on higher time frame levels of support and look to the lower side of this channel, okay? Because essentially what people are doing at this point is they're selling their euros and they're preferring, or essentially Australian dollars, to invest. And that has a lot to do with central banks, which is why you need to understand market sentiment. So make sure you know that trends are time frame specific, okay? This is downtrending now, but formerly it was moving to the upside quite significantly. If I swap to the weekly, okay, you can see that here. Okay, so you had a really steep uptrend, and now you've just got it turning to a slight downtrend, okay? And then if you drew it again as an uptrend, you would move your lines around, okay? So a pullback essentially on your monthly. Because if you go on your monthly, you can now see what would be a pullback on here. And again, the value concept comes into it, okay? So where you went previously was in between your 23.6 or 0.236 and 0.382. So reasonable value, but it wasn't quite down here. So I would expect in the long term, again, like I said, trends are time frame specific, that you will make it down here to these much better long side entries. And if that is where you want to buy, then that may be better for you. And that's probably an investor long. But you can see it takes you right back to your key moving averages, which price always comes back to eventually in markets that are not subdued nor manipulated, essentially, if you like. So today, I would like it long if it comes slightly lower, and I'll be trading it long as it falls, ultimately using this as a target and shorting to the upside as well. Thanks for watching, guys. Hope that helps. Join our live room. Trade with us live on charts every day. I will see you in the next one. See you there.